Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 19th day of February 2015, and this is the daily report for gold and silver. Other than palladium, we do have the precious metals complex trading lower this morning. Platinum, silver, and gold all down on the day. First to gold off roughly $5 to $6 on the day. 1207.18, that's our current screen print. It has had a low of 1205.70 and a high of 1223.30. Silver also trading lower on the day. It's off about 10 cents, 1637. We've seen a low of 31, so we are trading near the lows on the day. 1680 on the high. We'll look at silver in a little bit towards the end of the show. Traders, there's absolutely no doubt we are at a critical area in terms of gold pricing and what I believe to be a crossroads in gold pricing. And the reason for that is as follows. As you can see, we've got a daily chart up, and on this daily chart, I've basically got two fib retracements. One that takes us from, call it 1130 up to the top at 1306, and then our secondary one, which takes us from the dip in the market. In other words, the market moves up off of the lows in November, hits this high at 1239, and then trades back down. So this is our second area that we begin at, and they both terminate, of course, at the top. Now, when we do that, we get a very interesting scenario in that we get some real fib harmonics. Because of the way this market is traded, you can see that 61 and 50 match up, 50 and 38, and then 38 and 23 would match up also, of course. I don't have the 23 showing, but what we want to focus on is this 61% and 76% retracement, because these retracement levels are the absolute line in the sand that the market needs to hold if we can ascertain any kind of bullish sentiment, even taking into account this retracement or correction in the market, because what we're really looking at is a bigger picture. Let's go ahead and compress that. And that bigger picture, of course, is the market hitting these lows in November down here and then moving up off of those. So even at this point right now, you can see that 1198 is a 61% retracement. What I find most interesting is how that low is lined up absolutely right precisely to the point of that number, 1198 here, 1197 here. And so you can really see on this chart how this could be a pretty critical area. And traders, as we pointed out yesterday, it's not just in those fib numbers that we find this particular price point to be at a critical, what I call a crossroad, so to speak. If we look at this long-standing resistance line created by going from the tops of these markets and then extending that lower, we correctly identified a breakout as the market broke above that. But if you look at where we're at right now, we're really right back to that particular point. And my sense is a breakthrough this, which would be a breakthrough the price point of 1198, would signal a return to any kind of bearish sentiment that has been so prevalent in the market over the last couple of years. And traders, so our last piece of what I'll call technical evidence that we're absolutely at a crossroads is this Andrews pitchfork. We use this Andrews pitchfork predominantly really through last year as we looked at the various channels that the market was trading in. Although it was trading down, we could see that it would hit a certain channel and then break down. And so we were looking to see which channels we had the market trading between, so to speak. And there's no doubt we have, this is the most upper level channel that we have. It's at a minus 23% retracement, and we are really strapped right back to there here also. And so what that shows me is that there's a preponderance of evidence saying that we are at a critical area, and a break below this area to me would signal lower pricing ahead in the precious metals markets. Now, what are the other outside markets that we're looking at telling us, and are they providing us with additional information? Well, first, we want to take a look at our Standard & Poor's, or the equities markets itself. Now, intraday, the equities markets did break above, I'm speaking about the Standard & Poor's 500, this, of course, the E-mini half-a-day chart, did actually break above 21. I believe 2102 was the intraday high, so we've actually, at this point, gone to a new record high in the market that's right up here on these highs. They absolutely, of course, break these previous highs. And then when we look in this area, the previous high prior to this was just right around here. So we absolutely broke to that area. We did close a little bit softer on the day, but nonetheless, we've got an equities market that has some really strong potential to the upside. So traders, when we look at the dollar index, if we look at it with a more long-term study, so to speak, on these weekly charts, you can see that we're forming this doji. We definitely hit a little bit of resistance, and the market has been much softer since it tried to test roughly the 96 area. That's on the weekly. Now, when we convert the weekly chart to a daily, what we can see is this top activity. Yes, we are trading lower on the day. Today, we had a very, very strong dollar. You can see that in the market. Yesterday, slightly higher. In the 3 days prior to that, we had softness in the market. But what we're genuinely seeing is either a potential base being built before moving higher or consolidation before moving lower. But we are getting consolidation in the market, which is unlike what we were seeing in the dollar index in previous historical times. Let me try to compress this so you can really see what I'm talking about. And that is that the market would generally take off. You would get this series of sideways trading activity before sparking higher, sideways trading activity sparking higher. Now we're getting sideways trading activity. Will we see more of the same, or will we see this dollar continue to be strong on the day? And lastly, in terms of markets that we look at for indications of what we can see in the precious metals markets, we're looking at the crude oil market. This is a weekly chart. We had 1, 2, 3 weeks where we saw this price really rise above these lows that were hit roughly at $42 per barrel. Now we're genuinely closer to $50. We traded as high as about $55 per barrel and are now down to about 51 and change. 51.20 is our current screen print. So we're seeing oil again move under pressure. That tells me that we have really a push-pull scenario in the market. I'm going to be talking about that on our Chart This series, which I just did the interview for a few minutes ago. But really, we've got a push-pull scenario in which we have the equities markets and stronger dollar weighing gold down. We've got lower crude oil prices doing a little bit of the same. But more importantly, we have hotspots in the Ukraine, ISIS, and then Greece right now in terms of their austerity kind of really moving together and kind of butting heads, so to speak, and we're getting that push-pull scenario in the precious metals markets. So we are getting really mixed messages. And as I said, the most important thing is we are at a critical area right now, and we really need to see how it reacts at this point. And lastly, we'll take a look at silver right now. That is trading under pressure today. You can see that. Look at this extreme high up here on our daily chart. We are above the lows of the last couple of days, but my sense is that the critical area that we pointed out in gold, that the corresponding area in silver is approximately 1610, so it's really about 25 cents from here. It's not that far. A breakthrough this particular point really doesn't have any really strategically strong support in the market. There's a little area right here at about 1550. That would be supportive in 1450, but a break below this, like a break below that 1198, could signal dramatically lower pricing ahead. We'll have to see how all of this kind of unwinds in the market. We are going to remain sidelined. This is Gary Wagner wishing you, as always, good trading. We'll talk to you on Friday, tomorrow, for another daily update and review and our weekly review. Bye-bye.